I'm Yahoo Finance Executive Editor Brian Sozzi, and you're taking a look at a live shot of the opening bells on Wall Street on this big morning for corporate earnings. Colony Bancorp ringing the bell at the New York Stock Exchange to celebrate 50 years in business. And Ollie's Good Stuff Cheap ringing the bell at the NASDAQ. Always good to know you can find good stuff on the cheap. And I think you see Ollie there helping to ring that bell in that big mascot-looking outfit. Now, there's no shortage of market-moving headlines on this Tuesday. JP Morgan is out with a big earnings beat, and CEO Jamie Dimon is voicing his support for Federal Reserve Chairman Jerome Powell and the very institution President Trump and his team are pounding with attacks. Wells Fargo slashed its outlook after another weak quarter, further cementing its status as a banking laggard. And the CPI index for June came in hotter than May as first signs of Trump tariffs appear in the economic data. Headline figures, though, were in line with economists' forecasts. Now, Opening Bid is all about serving up investing analysis you need to know to unleash the power of your portfolio. We're digging into what's really moving stocks, giving you the unbeatable context to make decisions with all that money in your portfolio. Let's head over to the NASDAQ in Times Square and see what Yahoo Finance senior reporter Brooke DePalma is tracking on this very busy morning. Brooke.
Good morning, Brian. Stocks largely muted this morning as investors really digest three key things. The CPI report that largely came in line with, as expected from economists, as well as those big bank earnings and the latest news from the Trump administration in regard to Nvidia. Let's break it all down here. We have the S&P moving higher at the open, up slightly, about 0.5%. We have the Dow also just now leading into the market open. It was below, now moving just 0.1% higher, and the NASDAQ really slightly moving higher this morning, up 0.9%. If we take a closer look, I do want to take a look at Nvidia. Nvidia is up more than 3%, almost 4% at the open, and we did in fact reach record highs above that key $164.92 number. Stock now hovering around $170, once again moving higher, up roughly 4%. Now let's break this down. The reason why exactly we're seeing a bit of a rally here, as we've seen with Nvidia over the past few months, is the fact that the Trump administration has given Nvidia and chip makers the okay that they're able to sell their chips within China. Now, specifically for Nvidia, we have the H20 chip, but once again, keep in mind that they still require a license in order to sell in China, and so we're still waiting that. But if you take a closer look, we're also seeing other fellow chip maker AMD moving higher on this news. We're up about 7% in early hours trading here. Those are two we'll keep an eye on as we make way into the trading session. Sozzi?
Hey, Brooke, coffee on me when you get back to the office if you get a photo with Ollie down there at the NASDAQ. I mean, how can you not? You get that picture.
Lots of excitement.
Yeah, and some free coffee. All right, Brooke, thanks so much. We're kicking things off with your daily guide to the biggest market drivers of the trading day. Here's what I'm watching. Number one, bank earnings paint a picture of an economy chugging along despite trade uncertainty. JP Morgan easily beat EPS forecasts and hinted at a recovery in its lucrative investment banking business. BlackRock's earnings were mixed, but it still saw its assets under management hit a record at $12.53 trillion. The outlier here, Wells Fargo, doing Wells Fargo things, cutting its profit outlook after another poor quarter of execution. Number two, Nvidia expecting a green light to make billions of dollars again in China. Nvidia CEO Jensen Huang's charm offensive on President Trump this month seems to have worked. The chip giant saying it hopes to be able to sell its H20 chips to China soon. The stock is being sent higher on the news. And number three, the consumer price index for June came in line with estimates. The year-over-year increase of 2.9% was hotter than May. All eyes now turn to what the Fed does on interest rates later this month, or maybe it won't do anything. Now, here to break it all down, Lauren Goodwin, New York Life Investments economist and portfolio strategist, and Yahoo Finance senior reporters Brooke DePalma and Ali Canal. Lauren, good to see you. I'm not seeing you in a very big morning as earnings season kicks off. One thing that Jamie Dimon said on his prepared remarks in the earnings release that stood out to me, he thinks asset prices are elevated, and then secondarily, that is a risk moving forward. Do you agree with him?
I do agree with him. It's not necessarily that asset prices are unfair for the economic backdrop that we have today, but we know that there are risks on the horizon that are likely to impact the economic data and reality moving forward. Now, from a high-level markets and macroeconomic perspective, the earnings reports that we have coming out this quarter are likely to be reasonable. And I don't expect that the worst of the policy risks that we're seeing unfold in the moment to really hit the economic data until later this quarter and into Q4. And so we're looking at a market environment that could continue to be constructive moving forward. But as investors, we have to think very carefully about where incremental sources of value are. If they've been stored in momentum and beta here in the last couple of months, then focusing on the fundamentals and credit quality becomes so much more important moving forward.
Laura, let me just follow up on that, because is this one of those calls from a Jamie Dimon where we appreciate today, but a week from now, the markets are off their highs, and we go back and think, well, Jamie Dimon called the market top. Is that, what do you think he's trying to say here?
You know, I think that the banks in particular have many policy backdrop components that they've been benefiting from and may continue to benefit from moving forward. Last year, the Fed cut rates by 100 basis points. That helps steepen the curve. That tends to be constructive for bank earnings. More volatility means more sales and trading revenue, which can bolster bank earnings as well. And we're looking at a deregulatory backdrop moving forward that might be more favorable to the banks. I think the real challenge is if we see demand destruction as a result of tariffs or other policy changes moving forward. That's really where the challenge for the banks comes ahead. And so, if nothing else, I see this as a way to hedge the elements of the economic backdrop that a CEO can't control right now.
Ali, I asked Jamie Dimon on a call with reporters this morning why he called out elevated risks or elevated asset prices as a risk. I mean, he kind of laughed at me a little bit. He giggled. He basically said, well, look at the alternative would be stocks would be down. But he did bring up a good point in that the market is pricing in a soft landing. And I thought that was a very good thing to call out.
Yeah, and if you even take a look at the inflation data, right, we have yet to see those tariffs really affect consumer prices. We did see a little bit of signs, apparel prices ticking up, footwear ticking up, but used cars, new vehicles, those prices dropped. And that's an encouraging sign at where we're at. Now, at the same time, economists have been saying we saw a lot of front loading. Tariffs are going to take time to work their way through the system. So it'll be interesting to see how investors react to that. But then earlier this morning, we saw Bank of America released its fund managers survey, and it did say that sentiment was getting toppy, but that equity positioning is not yet extreme, even though it's overweight. So that is a positive sign moving forward that perhaps this rally can continue. Perhaps we can achieve the soft landing. Of course, Brian, as we know, the big TBD factor there is the Federal Reserve, what they decide to do when it comes to interest rates. And this CPI report that we got this morning pretty much tells a story that the Fed is going to remain on hold for the foreseeable future. We have markets pricing in basically a 100% chance that the Fed remains on hold in the next 2 weeks when we get that policy decision. And then September, we also saw odds dip below 60%. And that's pretty notable here since markets had consistently been pricing in a September rate cut. But it seems like markets are now thinking, maybe we could see a cut in December or maybe not even at all this year. And I wonder how investors will react to that reality.
Laura, let me jump back to you here. Dimon voicing his support for Jay Powell and the Fed's independence on that same reporter call. But going back to what he said about a soft landing, has the Fed already achieved that? Or in order to get that soft landing, it needs to cut rates at the end of this month at its meeting?
I think that if we look at the economic reality of the last couple of years, as much as it's felt tenuous and volatile, we have been living in a soft landing. Economic conditions have been very strong. And if anything, the main concern that most households are living with has been price levels, price growth over the last couple of years. And so the Fed, I think, has been right to be concerned about the risks to inflation ahead. I have long said this year that I think it's more likely the Fed cuts 0 times than 2 times over the course of this year. And that's because the Fed is in an important bind. The last 6 months, it's been very clear that the labor market and inflation sides of their mandates have been coming into better balance. That's a soft landing. But as they look ahead, the risks to both a tightening labor market as immigration policy changes and higher inflation as trade policy changes. Those are things that the Fed can't control, that their policy rate doesn't do a lot to improve. And so I think it's more likely that we see less out of the Fed than more.
Brooke, I know you are an avid watcher of egg prices inside the Consumer Price Index, but I'm not going to ask you about egg prices today. We're going to push them off the plate for a second. I looked at the rest of this report, and I didn't see a lot of inflation. My read was that the likes of a Walmart, Target, a lot of these big retailers might just be eating these tariffs instead of passing them on to shoppers.
Yeah, Brian, after so much warning this past earnings season about those higher prices coming for consumers, what we saw in this morning's report was just a few key areas of higher inflation. I know that Ali hit upon a few, but one that really stood out to me was furnishing. When you think about furniture, we saw it up 1% month over month. That was the biggest gain that we saw since January 2022. And what was interesting to me is that we saw this rise in prices back in March, and then in June, we once again saw those rise in prices in furnishing. And largely, what might be happening there is we saw this pull forward of inventory, all these retailers really bulking up. Well, now, Brian, those same retailers need to get ready for the holiday season. And so what I saw from a Bank of America survey is that there was meaningful improvements in furniture when it comes to exports to the U.S. from China. They rebounded notably in the month of June. Those were up 5%. When it comes to those exports from China to the U.S., also lamp and lighting, those also saw higher prices. And what we're really seeing here is these retailers, they need to ramp up their inventory ahead of back to school. They need to ramp up their inventory ahead of that key holiday season. And now's the time to do it. What also happened in June is we got that reprieve in those U.S.-China tariffs. That sort of gave the green light for these retailers to say, okay, we're not at that 145%. We back down to 30. Now could be this key window ahead of what was July 9th to get that inventory ahead on the shelves. And we saw a bit of that when it comes to apparel and furniture.
Points well taken. And we're also locked in on all things Nvidia off its H20 news. Those chips look like they'll be headed back to China. And I want to call up the earnings estimates for Nvidia. You can find these on the Yahoo Finance platform, but you can see how they've really fallen down versus 90 days ago, in large part because of unknown related to the not only just AI demand going forward, but what will happen with this China business. We now know, Lauren, and it's likely now estimates will have to climb for Nvidia, but do they also have to climb for other tech companies that play in China? And then how are you thinking about the tech trade moving forward?
I always hate to answer a question like this as a two-handed economist, but I think that we have to. This foundational layer of artificial intelligence is so important. There's a reason why we've seen these companies be gainers throughout the last couple of years as the AI trade has unfolded. They are so essential to moving this technology and these business processes forward that we're all looking forward to. And the news that we're seeing with respect to China is certainly positive news. Whereas an economist and a market strategist, I have some hesitation, is that there's not very much that investors or even these companies can do to influence the major geopolitical shifts that we're seeing globally. And when it comes to sales in China, or really US-China competition around this technology supply chain, I anticipate ebbs and flows in that dynamic. And so as policymakers try to decide, will the US be more open to collaboration with China and Chinese companies on these technology supply chains, or will they not? Companies like Nvidia and like many of the other Magnificent Seven and technology enablers are going to be in the middle of that fray.
And the S&P 500 NASDAQ hitting fresh record highs about 13 minutes into the session. And Ali, that really brings up the other point here. For records to continue to be hit on the major indices, tech has to work. And if you are bullish on the broader markets, you have to like this news out on Nvidia today.
Absolutely, Brian. This was a big question mark for Nvidia, especially as we gear up into earnings season. The China business is so important to this company. And like we were just talking about, it could potentially signal an olive branch when it comes to U.S.-China trade relations. But the tech industry and the tech rally has really kept these broader markets afloat here. We have Nvidia trading at a $4 trillion valuation, hitting its own record highs. There's no coincidence that that's happening at the same time that the benchmark S&P is also chugging higher. And I've asked strategists point blank, what is more important to this market if we do not see Fed rate cuts or if we see Nvidia deliver a bad earnings report? And 9 times out of 10, they always say it's Nvidia delivering a bad earnings report, because right now AI is just such an important theme within this market, within productivity, activity, and Nvidia is the leader there. So they have to keep leading in order to see these gains be sustained.
You know what's important, Ali? If Jensen Huang takes over for Jay Powell at the Fed. I mean, that would be absolutely mind-blowing. What a hell of a week of coverage here. That would be on Yahoo Finance. All right, everyone stay right there. We'll be back with more opening bid and our question of the day and stock of the day. Your clue, stock of the day is a company that is very tied to all things Nvidia. Welcome back to Opening Bid. While Nvidia bulls are out in force today on news as H20 chips are headed back to China, the complete opposite tone continues around struggling rival Intel. HSBC analyst Ryan Miller says he is cautious on Intel into its July 24th earnings release. Two callouts from this research note. One, Intel will likely see further market share loss to rival AMD in the lucrative server segment. And two, Miller thinks Intel will have challenges well into 2026 because of execution problems in its foundry business, or the business that makes chips for other companies. All right, let's fire up my stock of the day, and that is, we're going to stay on semiconductors, and that is Taiwan Semiconductor, or TSM, as it's called on Wall Street trading desks. I'm locked in on TSM for two reasons. One is the Nvidia H20 news, which could be good news for TSM as it manufactures Nvidia chips at its giant plants known as foundries. And two, TSM will report earnings on Thursday. By all indications, TSM stands to impress investors by lifting its full-year revenue outlook owing to strong AI chip demand. The wild card here is how bullish TSM will sound for 2026, given trade uncertainty and the AI CapEx cycle continuing to mature. TSM has no margin for error when it comes to guidance or quarterly execution. Jumping onto the Yahoo Finance platform, you can see TSM's stock is priced for growth with above market valuation multiples across the board. Still with me, Lauren Goodwin, New York Life Investments economist and portfolio strategist, and Yahoo Finance senior reporters Brooke DePalma and Ali Canal. Lauren, I am back to you on this one. What is your view on the valuations for large cap tech here into earnings?
Well, large cap tech valuations are certainly high, but that doesn't mean that they can't move higher. And with the sort of trade and regulatory backdrop for these technologies improving here in the short term, I anticipate, in agreement with Ali and Brooke's reporting so far, that this is mostly good news for the market, and that as these technology companies move higher, market breadth sort of moves along with it. The challenges that I mentioned earlier for these companies related to just the uncertainty around trade, but also with respect to TSMC, uncertainty around the specific provisions or capabilities that will be able to move forward from their partner Nvidia. There's a lot of uncertainty there, and so I anticipate that the quality of earnings from these companies will continue to be strong, but their ability to move their valuations to move higher and higher, completely unfettered, certainly likely to be challenged here in the next couple of quarters.
Well, Lauren, they will, TSMC will be a good test here, I imagine. If they come out here and raise their revenue outlook like I am hearing that could happen, and the stock trades off, that could really set the tone for large cap earnings season.
Yeah, that's absolutely right. And, overall, I anticipate that large cap earnings, though lower than in Q1, are likely to look a lot better for Q2 than many investors anticipated. And that's in large part because of the pause of policy changes related to tariffs in particular that we've seen over the course of this quarter. As we move into Q3 and Q4, the cost challenges that I anticipate businesses will be facing in larger order, and the decision that those companies will have to make with respect to passing those costs on to consumers or taking hits to margin, we're really going to be seeing a different story play out over the second half of the year.
Ali, as we focus on this Nvidia news, TSMC looks to have a potentially good quarter on its hands coming up. You look at Intel, they're not even in this discussion. Even AMD, which is a strong player in this market, is not even seen on the same wavelength as Nvidia at this point.
Right, and TSMC has really been able to ride this Nvidia wave pretty hard, and like you were saying, expectations certainly elevated heading into this latest earnings report. But TSMC also is vulnerable, right? We've been talking about the risks of trade, U.S.-China relations. They also have their customers concentrated in just a few of those names, right? Nvidia, Apple. So what happens to Nvidia and these big hyperscalers directly impact this manufacturer. So it's one of those chicken or egg situations where you want to make sure that demand is solid. You want to make sure that these companies are still chugging along here. And this news that we got this morning of these H20 approvals from the White House is going to be a boon to this company in particular. But again, those uncertainties, those risks ahead, I'm very curious to hear more commentary on that on the earnings call, along with more commentary on what we saw today, right, with those chip approvals now supposedly heading to Trump's desk. He's going to have to signal and sign off on this ultimately, but he has said that he wants to do that. So it all just stems from the Nvidia wave here.
Brooke, last word to you on our stock of the day.
Yeah, absolutely. What I think this really means is this solidifies Trump administration's intention to really win over this AI arms race. What I'm reading from multiple sources out this morning is that Nvidia getting the okay to put out those H20 chips really doubles down on the idea that the Trump administration is very serious about winning the AI arms race. We now know that Trump is set to speak next week at an event around the AI arms race. And when it particularly comes to the stock of the day, TSMC, we also know, based upon a report from the Wall Street Journal, is that they have increased investment in their U.S. expansion and delayed their second Japanese plant. And so this all really leads to the notion that the Trump administration is doubling down on not only getting on Jensen Huang's good side here, but also ensuring that the United States stays ahead of perhaps not only China, but also Chinese competitor Huawei.
Yeah, our roundtable's on fire today. People should be paying for this stuff. Oh my God. All right, it's time now for our question of the day. How popular is Apple's stock right now? Maybe not such a crazy question. Here's why I'm bringing this up. In today's BofA Fund Manager survey, it was noted that in the past 3 months, since April, global investors have raised their allocation to the tech sector by the largest amount since March 2009. During that span, though, Apple's stock has underperformed Google, Microsoft, Meta, and Nvidia by a country mile. Lauren, what happened to Apple? It used to be, everybody seemingly owns Apple, but now they are perhaps owning more of everything else in the AI space.
Well, I can't speak to Apple specifically, but I can speak to something I see very clearly happening within this tech space. We've spoken a lot today about the foundational layer of artificial intelligence, the semiconductor chip makers, manufacturers. We haven't spoken as much about the infrastructure layer, the energy companies. And then there's a third layer, the application layer. And this is where many companies outside of Apple have had more early releases, opportunities for their customers to deeply engage with new functions related to AI and what that can do in their daily lives. And that application layer, we are really only in the very earliest, I would even say pre-stages of what that will look like, not only for us as consumers, but also for businesses and the technologies that they use to enable their workforce. And so I would say the jury is still certainly out over who the winners and losers will be, and elements of data and personal security, where Apple has historically been strong, might be areas that gain more importance as this application layer builds out.
Ali, I'm going to decode this movement in Apple in real time. I'm using my iPhone to download AI applications from everybody else. And until Apple comes out with its own AI functions, they need to do, they're unlikely to regain that story, that bullish thesis.
Yeah, and that's a big reason why we've seen these year-to-date declines. They've just disappointed on the AI story. And fun fact for you, Brian, Nvidia is $1 trillion larger than Apple at the current moment.
That's a good fact. That's a good one.
That just gives some perspective here. But to Lauren's point, the use cases on the consumer side for AI, we just haven't been there yet. And that's an area that down the line, Apple could potentially double down on it, and we could see that momentum. Right now, it's really focused on those hyperscalers, a lot of B2B. For a company like Meta, that's been utilized by its advertisers, especially its smaller advertisers. So that's why we've been able to see these outside gains in some of these other Mag 7 companies. Apple, typically, they're not the innovators here. They usually sit back, they wait for the innovators to do their thing, and then they come in and make a better product. So that could be something that we see down the line here. Apple also focused on that user privacy data. We have seen some, shaky data with ChatGPT, Gemini, those types of products. So again, something that Apple might just want to sit on their heels and wait a little bit.
Just fix Siri, please, Apple, and tell us things aren't going to be bad in China. Big thank you to my contributors today, Lauren Goodwin, Brooke DePalma, and Ali Canal. Coming up, Yahoo Finance's Market Catalyst. We bring you the news behind the market moves for the trading day. Do stick around.